5 tips to stop insurance companies from lowballing you after a car accident. After a car accident, you think the insurance company is there to help, but what they're really doing is working behind the scenes to pay you as little as possible. And if you don't act fast, you could lose thousands without even knowing it. I'm Doug Burnetti, a Florida personal injury attorney, and I've seen every trick in the book after doing this for over 30 years. So let's talk about 5 simple ways to shut those tactics down before they cost you what you're truly owed. Tip number 1, don't accept the first offer. It's designed to be low. If you've been in a car accident in Florida and the insurance company has already sent you a check or settlement offer, you need to pause right now. The first offer is almost always a lowball. It's not a reflection of what your case is worth. It's a business move. Insurance companies know you're vulnerable, may be overwhelmed, and looking for a quick solution. They also know that if they get you to settle early, they cut off any future liability. So that first offer, it's not generous, it's strategic. Florida is what's called a no-fault state under Florida Statute 627.736. That means your own personal injury protection, or PIP coverage, will pay up to $10,000 for medical expenses and lost wages, regardless of who is at fault. But here's the problem. $10,000 does not go very far, especially if you have serious injuries. The moment your damages exceed the PIP insurance limits, and they often do, the insurance company on the other side starts calculating how to pay as little as possible beyond that. That's why accepting the first offer without legal guidance can destroy the value of your claim. You may not even know the full extent of your injuries yet. Some conditions, like soft tissue injuries, herniated discs, or even mild traumatic brain injuries, don't show up fully for days or even weeks. Once you sign that release and cash that check, you're done. No going back. Tip number 2, get all medical treatment and document every step. Insurance adjusters look for excuses to downplay your injuries. One of the biggest weapons they use, gaps in treatment. If you delay going to the doctor, miss follow-up appointments, or stop treating because you think you're fine, they'll use that against you. They'll argue your injuries weren't serious, that you weren't really in pain, that if you were hurt, you would have sought consistent treatment. In other words, any break in medical care becomes a crack in your case. Under Florida law, you must seek initial medical treatment within 14 days of the accident. You do that in order to qualify for PIP coverage benefits. That's not just a technicality, it's a ticking clock. If you wait longer, you could lose access to that $10,000 in PIP coverage. More importantly, from a liability standpoint, delaying care can make it harder to prove the accident caused your injuries at all. And here's another key point. Insurance companies will scrutinize your medical records, every visit, every note, every prescription. So don't just tell your doctor you're doing okay if you're actually hurting. Be honest, be detailed, and make sure everything gets documented. Medical records are one of the strongest forms of evidence in a personal injury claim. Tip number 3, don't talk to the adjuster without a strategy. Let's be clear, insurance adjusters are trained negotiators. Their job is not to help you. It's to protect the insurance company's bottom line. They may sound friendly. They may say just, quote, need your side of the story, close quote. But that call is not casual. It's part of a playbook. Everything you say can be recorded, and even innocent statements like, I'm feeling better, or I didn't see the other car, can be twisted later to reduce your payout or blame you for the accident. You are not legally required to give a recorded statement to the other driver's insurance company. In fact, in many cases, you absolutely should not. One Florida case that illustrates the dangers here is Allstate versus Bosher, where discovery revealed tactics used by insurers to manipulate claim evaluations behind the scenes. That case changed how plaintiffs could uncover insurance company procedures, but more importantly, it showed how much insurers work to control the narrative early on. The takeaway? Don't go into that conversation blind. If you must speak with an adjuster, do it with a plan, and preferably with a lawyer guiding the process. Tip number 4, understand the full value of your damages. Insurance companies love to talk in terms of reasonable costs, but here's the reality. They have their own internal formulas. Like, for example, they have their own software, one of which is called Colossus, and they use that to calculate their payouts. These systems often undervalue claims for pain and suffering and future medical care and long-term impacts. In Florida, you're entitled to recover both economic and non-economic damages. anytime you're pursuing a personal injury claim. That includes past and future medical expenses, lost wages, and reduced earning capacity. And the non-economic damages like pain and suffering, mental anguish, loss of enjoyment of life, inconvenience. But if you don't understand the full scope of these damages and you don't document them, your payout will reflect only a fraction of your true losses. Here's a real example. In the case of Bystrom versus Federal Insurance, the court reaffirmed the plaintiffs could recover future damages even in the absence of absolute certainty, so long as they could prove the damages were reasonable and reasonably certain to occur. That case understands how future consequences, like ongoing rehab or reduced ability to work, deserve compensation. But insurance companies won't volunteer that. You have to prove it. So ask yourself, have you documented how your injuries affect your sleep, your ability to pick up your child, how you drive? Can you work a full day without pain? These aren't just quality of life issues. These are compensable damages, but only if you bring them into the light. Tip number 5, don't settle until you know the full picture. This ties everything together. You shouldn't settle your case until you know 3 things for sure. Number 1, the full extent of your injuries. Number 2, the total cost of your current and future treatment. Number 3, whether any liens or subrogation claims might eat into your settlement. And here's why that part matters. In Florida, medical providers or health insurance companies, they can assert a lien for money they've paid out against your personal injury settlement. That means, for example, if you sell your case for $30,000, but you owe $20,000 in medical bills, that's going to eat into your recovery when you have to pay some of those back. If you're not careful, you could walk away with almost nothing. So you need to be well aware of the big picture there. This is where legal strategy really comes into play. We often negotiate these medical bills and liens on the back end of the case as the lawyer handling the case. Sometimes we can reduce those by thousands of dollars. But if you rush into a settlement without accounting for those things, you could be stuck paying out a lot of the settlement money towards those liens and bills, etc. And remember, Florida has a 2-year statute of limitations for most personal injury claims. So while you don't want to wait forever, you do have time to make sure you get it right. Settling too soon is one of the biggest reasons people leave money on the table. And once that release is signed, there's no going back, even if new medical issues arise or if you discover the damage is worse than you thought. Let's recap here. If you want to stop an insurance company from lowballing you after a Florida car accident, number 1, never accept the first offer. It's a trap. Number 2, treat early and often and document everything. Number 3, don't talk to the adjuster without a plan or without a lawyer sitting with you. Number 4, know the full value of your damages, including pain, suffering, and future costs. And number 5, don't settle until you've seen the whole financial picture. These aren't just legal tips, they're tools to level the playing field. Because when you're up against a multi-billion-dollar insurance company, you can't afford to play defense. You have to know how the game works and how to protect yourself at every stage. Now, if this helped you understand how to protect your settlement, then you're going to want to watch the next video. It's called 5 Questions Adjusters Don't Want You to Ask. And it's essential viewing it if you want to flip the script and take control of your case. In that video, I'll walk you through the 5 specific questions that can force an adjuster to show their hand, questions that they hope you'll never bring up. Because once you do, the entire negotiation dynamic changes. So whether you're just starting your injury claim or already deep in the process, this next step could be the key to maximizing your compensation and avoiding the traps that cost people thousands of dollars every single day. See you over there.